Should you invest and work on your financial goals in 2025? We're in the new year, guys. Happy New Year. My name is Sam Hadden. I'm a client manager and strategy specialist here at Infinite Wealth. Today, I want to bring you a video with a bit of a market update and go through some interesting statistics about what's going on in the market, in our economy, particularly here in Perth, WA. So hopefully it's going to help you to make more educated decisions and be more informed. Please do try to stick with me. I'm going to go through some really good data today. And it might seem a little bit nerdy, but when you empower yourself with good data like this, it helps you to be more informed, make better investment decisions. So without further ado, let me go ahead and share my screen and take you through a little bit of a presentation. So the key points I'm going to go through is a bit of an overview of the Australian market. Should you invest in Western Australia in 2025? Some statistics about the economy. Some psychology of property investing, and we're going to finish with some forecasts as well from some of our experts. I'm going to be taking you through a lot of credible sources and experts today, such as SQM Research, CoreLogic, Iron Vision, Oxford Economics, and some more in there as well. Now, if I may just give a quick introduction for people who may not know me watching this video. My name again is Sam Hadden. I'm a strategy specialist here at Infinite. I've been investing for 15 years now, and I've got a 7-property portfolio. I've actually been involved with Infinite for over 10 years now. I started off here as a client back in 2012. I'm certified with the Real Estate Institute of Western Australia. I've studied some professional finance with the Monarch Institute. I'm a member of the Property Investment Council of Australia, and I've proudly helped my clients to buy over 80 properties worth over $50 million. And a little bit about who is Infinite. So we are a wealth planning business. We've been in business for 14 years now. We have a range of financial services here, property investments. We help people with tax strategies, property management, and we've worked with over 3,000 clients to buy over 1,200 properties around Australia now. So a quick start with a look at the property market. It's worth over $10 trillion now, and this is the median house price of all the different cities. As you can see here, Sydney at the top at 1.8, and then a lot of the other major capitals in the low 1 millions. Adelaide at 950, Perth at 825, and then some of the other cities there a little bit lower. So Perth is definitely catching up. We had a cracking year with over 20% growth last year. So let's go into where we think the next year is going to look, and obviously what sort of growth we can expect. But yeah, it's really good to see Perth coming up after the previous decade. We were lagging so far behind a lot of those capital cities. This is a really big one. So the CommSec State of the State report. So they look at all the different states and territories around Australia and do a report, I believe, a couple of times a year. This is their October edition. And for the first time in a decade, WA now is ranking first. And we led 3 out of their 8 major indicators, such as retail spending, population growth, low unemployment, housing finance, equipment investment, and economic growth. This is a free report, guys. You can find this on the CommSec website. Now, some highlights from WA. Lowest unemployment in the country, 3.7%. Population growth, 3.3%. Again, number one. Highest household income. We've just overtaken Canberra. We had 7% economic growth last year. We've got $33 billion worth of infrastructure projects, strong resource market, and affordable housing market as well. And we've got a $5 billion extension coming into the Perth airport. Going to be the second biggest in the country, second to Sydney. We've got a lot of international, routes now. That we've got direct flights to Rome and Paris and London, and becoming a more internationally desired location and doing a lot of business and good for immigration. Now, good infographic here from McCrindle showing the average income, household income, and wealth. WA is now number 1 for household wealth and also for the average household income. So WA doing very, very strong there. And with the incomes, that gives us better affordability. So our house prices are still lower than most of the major capital cities, and yet we have those higher incomes. So this shows us that we've got more affordability towards purchasing housing. Labour markets, as I said, lowest unemployment in Australia, and the job vacancies are looking very, very good as well. So the 10-year average is 32,000 job vacancies. It hit 47,000 last year. It is trending down now, but still very good for people looking for work and for getting some very attractive and competitive wages in Australia. Trade goods. So as we can see, Perth, obviously WA went into a bit of a downturn after the last mining boom, 2013, 2014, 15, 16, and then we've been trending upwards ever since, and still doing very strong. And we actually are the one of the biggest states in the country in terms of export goods and import goods. We're the biggest in many of them, so we're very much driving the economy right now. And if we see commodity prices pick up over the next couple of years with a lot of new governments and infrastructure spending and tax cuts, then that's going to be even better for WA. Now let's talk about the housing shortage. Now this infographic from Hotspotting really highlights what's happened over the last decade as a nation. So in the population, we can see we've gone from 23 million to 26 million. That's 3 million people over 8 years. And yet listings have decreased from 340 to 220. There's a 36% decrease in listings of property for sale. Then we have the rental market, which is even more dire. We've had a 58% decrease in average listings on rental properties for 75,000 down to 32,000. So we've got such a rental shortage, which is pushing up those rentals and making it very hard for tenants, unfortunately. Now, the population growth has been one of the biggest stories. If you go back to 2019, our average population growth was 36,000. 2023 was 93,000. So it's tripled. Yeah, we haven't got the figures for 2024 yet, but I believe a little bit less than 2023, but still up in that sort of 80,000 people population growth range. And that's the highest as an average growth rate for a state. So we've got an annual growth rate of 3.3%. So lots of population coming in. But unfortunately, we're not building enough houses still, okay? Now, we've had a bit of an uptick, but when you look at this graph here, you can see 2023-24 financial year, the analysis on housing demand, as in how many houses we needed to keep up with that population growth. We needed to build 19,000 dwellings. We have an average two-year growth of buildings of 11,000, okay? Now, if that continues, right, as you can see, the dark blue line here, we got a deficit of 8,000 houses last financial year. This financial year predicted almost 15,000, then 27, then 28. So we've got a forecast of having a pretty dire shortage of property simply because, the cost of construction, the amount of labor, the amount of buildable land that we have, being able to get that property supply out of the ground is very difficult. At the same time, we've got high population growth. So the housing shortage, unfortunately, is for a lot of people is definitely here to stay. But there is an opportunity there for investors, particularly if you are looking to build a new property, add some supply to the market, and and make some growth and provide more housing to the market as well. Rental vacancy rates, we had an oversupply in that last downturn, 2015, 16, 17, and then it's just been absolutely plummeting since and been in the doldrums since about 2021, 2022. Balanced market, according to REWA, 3%. We're currently sitting at a 0.7% vacancy rate, guys. And then those rents have been increasing significantly. Average house rents in Western Australia now are $820 a week almost. Units and apartments sitting around $550 to $650 as well. So we still had some really good rental increases. Listings have been dropping for the last 5 years as well, dropped for an average of 13,000 listings to about 4,000 listings. And median days to sell a house dropped from 45 down to less than 10 days to sell a house. Very competitive. House comes on the market, sold in just over a week with multiple offers at the moment is still the case in most areas with most houses in Perth right now. Now, in terms of the national property clock, we see here Perth still very much in a rising market, about sort of halfway through this growth period, we believe. Adelaide and Brisbane getting more closer to their peaks. Sydney already in a decline. Melbourne been declining for some time, and Canberra, Darwin, and Hobart already very much in the decline and reaching the bottom of their markets with the property clock. Now into some forecasts. SQM Research. As of 2025, we've had Lewis Christopher come out with his famous boom bust report. This is a summary of the scenarios that he predicts, guys. I'm not going to go through every one of these, but I have highlighted Perth. In his base case, he's expecting interest rates to drop about 0.5% by the middle of the year, high population growth to continue, and no new inflationary outbreaks, giving a forecast of 14 to 19%. In a more modest scenario where we don't get rate cuts and population growth slows and potentially inflation stays high, we'd only get a 7 to 11% growth rate, but that's still very good We're going from, potentially, you look at the last 12 to 18 months with Perth, it's been, we did over 20% growth. You could say that was, having like 42, 43 degrees days every day, very, very hot, too hot, right? Now we're probably looking at going back to a more nice, mild sort of warm temperature in the sort of low 30s degrees. But definitely looking at some growth this year, anywhere between 7 to 19%. But I would sort of market it around that sort of 10 to 12%, I believe. Now, Oxford Economics have also came out with some forecasts. They've also got a full report that you can look at where they went into a lot of statistics about the economy and property markets and housing supply. And their forecast shows, as of the graph here, Perth averaging 10% growth for the next 3 years until June 2027, giving us a new median house price in 2027 of $1,050,000, 30% growth, and unit prices 640,000. Now, bank interest rates are forecasted to fall. Now, obviously, everyone is always waiting to see what the RBA says, and there's some differing opinions, but the consensus mostly is from most financial experts and economists is that we are going to get rate cuts, most predicting starting by mid this year, maybe a little bit earlier, maybe a little bit later, but they're coming. We're predicting 3 to 5 interest rate cuts, which could drop the interest rates about on your mortgage about a 1 to 1.5%, based on the cash rate dropping from the RBA. So that's going to be a welcome saving and also improve people's borrowing capacities, which will also be healthy for house prices, guys. So the scorecard for Perth, a cash rate looking like it's going to drop over the next 12 months, 158% increase in population growth, 4-year house shortage of 28,000 dwellings, a low vacancy rate, and 30% capital growth prospect, according to some reliable sources there with the forecast. Okay, so obviously there's no crystal balls here and nothing's guaranteed, but looking at all these macro fundamentals that I've shown you guys, it is looking still quite positive for Perth for a few years. So the prospects for 2025, no solutions to get out of this rental shortage. We're still coming far short of the government's national predictions or needs, and also WA's needs for housing. So that will mean that rentals will increase. We're getting tax cuts. We're getting interest rate cuts, which will boost confidence. Sydney and Melbourne are the top end of the market. They're struggling a bit to come into a downturn. And those second wind markets, your Perth, Brisbane, and Adelaide, are still looking very strong. Now, Stuart Weems, this is a little bit nerdy, guys. Hopefully I'll try and explain this very quickly. But Stuart Weems, a great guy, an analyst from Pro Solution Financial Services, and he looked at the average growth rate of cities over a 43-year period of time and showed that most major capital cities had an average growth rate of 7% per year, and that most assets and markets should return to their normal growth rate over a long period of time. Now, because Perth had quite a suppressed 10 to 15 years there after that mining boom, we are behind on our growth rate. We've only been averaging about 5 to 6%. So he states here in this report that we're $200,000 undervalued, which is about 39%. So that should really translate over the next couple of years there as well. So hopefully that makes sense. Now, when you look at asset prices over the last, now just looking at a bit of big picture stuff here, guys, looking about the philosophy around property. So 50 years of property markets here from 1971, done by Propertyology, with the median house price in today's world of over $1 million in capital cities. You can see over this 50 years that there's been recessions, stock market crashes, global financial crisis, mining downturn, APRA banking squeeze, COVID pandemics. Yes, obviously we've had some downturns along the way, but over the last 50 years, you can see how much property has been resilient and continued to grow as our economy grows, as banking credit continues to grow, and as our economy grows. Property will always capture the gains and needs of society as its number one asset and chosen asset for most of us. A lot of arguments can get made against capitalism and printing money and expanding finance, but I wouldn't be betting against something that's been working this way for hundreds of years. So now that also shows coming into compounding growth. When you're looking at buying a property, obviously hard to buy something for $650 today, but using this really good compounding graph here from Propertyology, if you buy $650,000 property and it only grows at 6% per year, that's what we use in our property plans for our clients. You see the average growth per year in the green. By 10 years, it'd be worth 1.1, and then in 20 years, it'd be worth a $2 million asset. And as you're owning this asset, the mortgage will be getting organically paid off, the rent will be increasing marginally every year, and starting to produce an income as well. So, just looking at the philosophy of investing in property as an asset to provide wealth for you, your family, your retirement. Finally, guys, I'll leave you with some statistics here because landlords get a lot of slack out there, and just want to create some context about, the dynamics of the market when it comes to being a landlord and what we contribute to society. So government landlords have been decreasing. So you think you rely on them for council housing, social housing since 1994, 1995, over a 20, 30-year period. Government housing has been decreasing. They only make up about 4% of the property market now. That means private landlords need to provide about 90% of rental accommodation. That's 1 in 3 people, 7 million renters, really. You really need to provide housing for. So without private landlords, we don't have that rental accommodation. And then when it comes to tax, a lot of people, talk about the whole negative gearing thing being, not good for the system. But everyday property investors pay $10 billion each year in property taxes, land tax, council rate, capital gains tax, and stamp duty. So we're giving $10 billion. They talk about how much we claim in negative gearing, but they don't talk about how much we pay in taxes. Then finally, when it comes to retiring, property investors do very well when it comes to self-funding their retirement and not needing an old age pension. So $50 billion is estimated that they save in annual cost to taxpayers for old age pensions. Okay. So something to keep in mind when you are being a property investor and thinking about being a property investor as well. So thanks for sticking with me, guys. I hope that these statistics and these insights have been very beneficial to you in considering your next investment. And if you would like to have a chat with me, if you're not a client already, please feel free to book a no obligation call with me, and I'd love to hear your thoughts and see where I can guide you as well. Happy New Year again, guys, and wishing you all the success in 2025. Thank you.